In today's video, I'm going over everything you need to know about the Vanguard High Dividend Yield ETF, VHY, listed on the Australian Stock Exchange. Hi everyone, and welcome to the series on Exchange Traded Funds, or ETF investing, where I look into specific ETFs and show everything you need to know about the product offering before buying shares of the fund. ETFs are personally my favourite way to passively invest, as it takes the stress and worry out of stock market investing, which can be very volatile with wild price swings holding individual stocks. We will go over the ETF fact sheet, including the management fee, the index the ETF tracks, dividend yield, payment frequency, and the fund's performance. I will also go over the top 10 holdings in the fund, as these typically make up the largest portion of the weightings and resulting performance of the ETF overall. It is always crucial to understand what you actually own in these ETFs before buying them. If there's any ETFs you are interested in and would like me to make a video on, write it down in the comment section below. VHY is an ETF provided by Vanguard, who own and operate the fund. Vanguard are the ones who actually own the underlying shares in individual companies. So when we buy shares in the ETF, we buy from Vanguard, who continually issue new shares in an open-end fund, and not the individual companies inside the ETF. VHY aims to track the performance of the FTSE Australia High Dividend Yield Index before taking into account fees, expenses and tax. The ETF provides a low-cost exposure to companies listed on the Australian Securities Exchange that have higher forecast dividends relative to the other ASX-listed companies. Security diversification is achieved by restricting the proportion invested in any one industry to 40% of the total ETF and 10% for one company. Australian Real Estate Investment Trusts, or A-REITs, are excluded from the index. This ETF tends to suit buy and hold investors, primarily seeking tax-effective dividend income containing franking credits plus long-term capital growth. Stick around to the end of the video where we'll see how good the performance and returns of VHY have been over time. To find the ETF in your brokerage account, you will need to type in the ticker code VHY to bring up the options to buy or sell shares in the fund. It pays distributions, which are dividends from the ETF, 4 times a year with a yield of 3.8% and has a management expense ratio, or MER, of 0.25% per year. So for every $10,000 invested, it will cost $25 per year in fees. And this isn't a bill you have to pay immediately. It is automatically deducted from how much money you have invested in the ETF, so you never really notice anything being paid or taken out of your brokerage account. Now, since this ETF tracks the Australian markets, it is heavily tilted towards banks and mining companies. The largest portion of the fund, at 39%, is in financials, followed by materials at 23% and consumer discretionary at 13%. Utilities and consumer staple companies make up the smallest percentage of the fund, under 4% each. One of the benefits of investing in Australian shares is their historically high dividend yields due to the banking and materials sector, along with the franking credits to eliminate double taxation on company earnings paid out via dividends, with the possibility of getting a tax refund if your tax rate is lower than the corporate tax rate. The bulk of the Australian stock market returns have come from dividend reinvestment, leading to the compound growth effect over time. If you're enjoying this style of video, feel free to give it a like to let me know and subscribe for more. Now, when purchasing shares in an ETF, I like to have a basic understanding of the top 10 holdings, as these companies will have most of my money allocated to them, and they will end up driving the bulk of the fund's performance. So we'll quickly go over which companies are in the ETF's top holdings and what they do to make money. The Commonwealth Bank of Australia is a multinational Australian bank with businesses across New Zealand, Asia, the United States and the UK. It provides a variety of financial services, including retail, business and institutional banking, funds management, superannuation, insurance, investment and broking services. The Commonwealth Bank is the largest Australian listed company on the Australian Stock Exchange and makes most of its money through retail banking services, along with business and private bank lending. BHP is an Anglo-Australian multinational mining, metals and petroleum company headquartered in Melbourne, Australia. BHP was founded in 1885 in the mining town of Silverton, New South Wales, and by 2017, BHP was the largest mining company in the world based on market cap. It makes money by mining, exporting iron ore, copper, coal and extracting petroleum products around the world. Westpac is an Australian bank and financial services provider headquartered in Sydney, Australia. Established in 1817 as the Bank of New South Wales, it acquired the Commercial Bank of Australia in 1982, before being renamed shortly afterwards. It is one of Australia's big four banks and is Australia's first and oldest banking institution. It makes money from the provision of financial services, including lending, foreign exchange, superannuation funds, investment portfolio management and insurance services. Telstra Limited is an Australian telecommunications company which builds and operates telecommunications networks and markets voice, mobile, internet access, paid television and other products and services. Telstra is the largest wireless carrier in Australia, with 18 million subscribers as of 2020. Telstra has a long history in Australia, originating together with Australia Post as the Postmasters General's Department upon Federation in 1901. Telstra has transitioned from a state-owned enterprise to a fully privatised company and has recently focused on diversified products and emerging technologies. It makes money by selling its telecommunication services primarily to those in Australia. Transurban is a road operator company that manages and develops urban toll road networks in Australia, Canada and the US, and was founded in 1999. In Australia, Transurban is the full owner of CityLink in Melbourne, which connects 3 of the city's major freeways, and has stakes in 6 toll road motorways in Sydney, and 6 in the Link Network toll road motorways in Brisbane. In the US, Transurban has ownership interests in the 495 express lanes on a section of the Capital Beltway around Washington, D.C. It also has an interest in the Connecting 95 express lane projects on Interstate 95. In Canada, Transurban holds an interest in the A25 motorway. It makes all of its money from these owned toll roads around the world. Fortescue Metals Group, often referred to as FMG, is an Australian iron ore company. As of 2017, Fortescue is the 4th largest iron ore producer in the world, after BHP, Rio Tinto and Vale. The company has holdings of more than 87,000 square kilometres in the Pilbara region of Western Australia, making it the largest tenement holder in the state, larger than both BHP and Rio Tinto. With its focus currently on iron ore production, this is primarily how it makes its money exporting its product around the world. National Australia Bank, or simply NAB, is one of the 4 largest financial institutions in Australia in terms of size, earnings and customers. NAB was ranked the 21st largest bank in the world, measured by market cap, and 52nd largest bank in the world as measured by total assets in 2019. NAB is one of the largest lenders to small and medium businesses in Australia and makes money through traditional banking services, including wealth management, investment banking, credit and access card facilities and insurance. Wesfarmers Limited is an Australian conglomerate headquartered in Perth, Western Australia. It has interests predominantly in Australia and New Zealand, operating in retail, chemical, fertiliser, industrial and safety products. Wesfarmers was founded in 1914 to provide services and merchandise to Western Australian farmers. It was listed on the Australian Securities Exchange in 1984 and grew into a major retail conglomerate, including many well-known subsidiaries such as Bunnings, Kmart, Officeworks, and various industrial companies. It makes money by selling various industrial products such as gases, safety equipment, fertilisers, and various day-to-day household products and building materials to consumers. The Australia and New Zealand Banking Group Limited, commonly called ANZ, is an Australian multinational banking and financial services company headquartered in Melbourne, Australia. ANZ was established in 1951 when the Bank of Australasia merged with the Union Bank of Australia Limited. It is one of the big 4 Australian banks, and Australian operations make up the largest part of ANZ's business, with commercial and retail banking dominating. ANZ is also the largest bank in New Zealand. It makes money by lending to retail customers and businesses, along with investment banking, insurance, credit and access card facilities. Rio Tinto is an Anglo-Australian multinational and the world's 2nd largest metals and mining corporation, behind BHP, producing iron ore, copper, diamonds, gold and uranium. The company was founded in 1873 when a multinational consortium of investors purchased a mine complex on the Rio Tinto in Spain from the Spanish government. Since then, the company has grown through a long series of mergers and acquisitions to place itself among the world leaders in the production of many commodities, including aluminium, iron ore, copper, uranium and diamonds. Although primarily focused on extraction of minerals, Rio Tinto also has significant operations in refining, particularly for refining bauxite and iron ore. It makes money by mining, processing and exporting these commodities around the world. Now, ETFs are considered to be low-risk investments because they are low-cost and hold a basket of stocks or other securities, increasing diversification. For most individual investors, ETFs represent an ideal type of asset which builds a diversified portfolio. Still, unique risks can arise from holding ETFs, as well as other special considerations paid to taxation depending on the type of ETF. Since inception, VHY has had an average annualised return of 9.2% and a cumulative return of 145%, which goes to show the power of dividend reinvestment and compound interest, keeping the money invested growing faster over longer periods of time. Now, of course, past performance is no guarantee of future performance, but it's always a good sign of consistently improving business fundamentals, continually driving each individual stock higher within the ETF. I prefer to look at the cumulative returns as it includes the dividends paid to shareholders, which should always be included as we're getting some value back, plus with the dividends reinvested, this is what provides the compounding effect exponentially increasing our returns the longer we have our money invested in the fund. This is the sort of approach I take investing for the very long term using ETFs, and one day live off the investment portfolio as passive income through either dividends or selling down small parts of the position, but maintaining the bulk of the capital. If you want to see how these companies make money in detail, watch the playlist shown in the end screen. Let me know in the comments what you think of this ETF and whether you currently own any shares or plan to buy. If you enjoyed the video, leave a like and subscribe to the channel for more personal finance and stock market investing. Thank you for watching, and I'll see you on the next one.